Global stocks in an unprecedented rally. Oil back below $87 a barrel. What comes next for the market this week? Let's find out. Hey, Clifford, the 25-year trader, back with another Monday morning futures market open. And what a week it was last week. Just look at this rally. Wow. It just goes to show you, like I said in one of my other videos, always expect the unexpected when trading. Now, I actually thought it was a downtrend back in early this month, but it just goes to show you how quick the markets can flip the switch, flip the script like that. Um, However, one thing I did learn over the years is that you never want to fight the tape, and the tape is basically the data that the market's giving us, right? All the volume, all the ticker symbols, everything that's happening. The tape is bullish. So, in my opinion, we are bullish. Another reason we're bullish is look at this. See this all-time high right here, 7,100? We have a close below the all-time high. You don't want to try and short the market here. And if you do, good luck. I wouldn't. The only times I think you should ever short the market is maybe in like September or October or maybe February. But even then, I think you're better off buying the dip. All right, so what comes next this week? Let's take a look. Monday, Canadian dollar numbers. For anyone who's trading the Forex, you might want to watch that if you're watching the Canadian dollar. A few CPI for them. Some ECB president talk here if you're trading the euro, British pound. But for the US, here we go. Tomorrow, retail sales. That's an important one. Definitely the Fed's going to be watching that. And then we got the new guy, what's his name, Warsh, who might be who's supposedly going to take over the Fed, I believe, this month, actually, or next month. And then Wednesday, we got more European stuff here. If you're trading the euro, you might want to pay attention to these. And towards the end of the week, we have unemployment claims, a few manufacturing reports as well. So really, it's not a whole lot of data this week. I would say the biggest moves are going to be tomorrow's retail sales and the Fed announcement. So definitely you want to be paying attention to that. But if you're not trading the Forex, then these other ones are probably just going to, I think the market's going to take its move based off of what we are, but basically off of volume and things like that. So let's take a look real quick at the COT report. So this, for those who don't know, is called the commitment of traders. Even if you're not trading the futures market, you want to watch this data because this is what basically moves the markets like the S&P 500. This one here is the Dow. Let's take a look. Okay, so they were short 48,000 last week, but then on Friday, it looks like we got a new report. Now they're short 116,000. This is good. This is a sign that the bull market's going to continue because the more short they get the S&P, the higher the market normally goes. And I believe that has to do with kind of like protecting themselves, buying puts and all that, or shorting the S&P 500 futures just in case portfolios want to hedge themselves and stuff like that. So definitely seeing them short the futures market more here is leading me to believe we are even more confident that the bull market is going to resume. But let's take a look. Now you could get a correction, of course. No bull market is usually straight up. There's always going to be slight corrections along the way, and usually that's when you can buy the dip. So in this case here, I would say, if we get a pullback to maybe this trend line here that I just drew in, I would buy this dip for sure. Maybe at support here, like probably 7,100. I'm going to say even a little deeper, even 7,000. 7,000 to 7,100 I think are good buy zones for the S&P 500. On the NASDAQ, same thing, kind of vertical here. We got a close above all-time high right there. So same thing. Pullbacks I think are a buy on the dip, although they're starting to get long the NASDAQ here. This is again that COT report. Russell 2000, they were short here. And this is one thing you want to watch too. When they get too overcrowded short, then the market can close positions quickly and start to rally. So keep an eye on that. But definitely I would say buy the dip on the Russell, buy the dip on all these stock market indexes right now, because I think the bull market is back. Just by looking at everything here, all the data. What else? Crude oil. Let's see what they're doing. On the commodity side, they're still long oil, but you see they're closing some long positions. Here they were long 239,000. Now they're only long, what is that? 204. So they closed a little bit, not too much, but it's definitely a sign that they did get short. I mean, look, we saw a pretty big drop here from the high. That's about 30 30% drop from like 100 something down to like 88, $87. So that's definitely bearish oil for me. Um, and what I'm really watching here in oil is this 50% level here. This is the low for the year, high for the year, and now we closed below this 50% Fibonacci retracement level here. So that's also bearish in my opinion. What else we got here real quick? We got, okay, the currencies. I was watching this one. This is the euro, by the way. And look at the COT. See, this is what I mean. They're neutral. One thing I have to say about the COT, I used to use this data wrong. I used to use it as a trend follower, meaning like if they were long, but I saw them get more long, I would be like, oh yeah, that's the time to buy. But then I learned from a really professional. His name is Jason Shapiro, and he's like a he was in the book Market Wizards, so he's like a really he was a hedge fund manager, managed millions or billions, whatever, and he discovered a strategy called overcrowding, the Commitment of Traders report. And basically, so I was using it wrong. Like if I saw them long, I would wait for them to get more long, then think that it's time to buy. But his theory discovered that if they get overcrowded long, you actually are better off going the other way, because when they get overcrowded long, that means they're going to start to close the positions because there's no one else left to buy. So I have to give the contrarian way of now learning to use this COT report. I really have to give a shout out to Jason Shapiro, because he taught me how to use that, and so far it's really made a difference. So now I know that it's safe to get long here because they're not overcrowded long yet. You see, they're neutral, and that's something I learned from him. So definitely, if you've never heard of his report, definitely check out Jason Shapiro, Crowded Market Report. I follow him, and it's been really helpful to me. So definitely check that out. Shout out to Jason Shapiro real quick. Okay, so back to the euro. I mean, this is a 1, 2, 3 bottom. Look at this, 1, 2, 3 bottom, and we have a close above resistance right here. That is bullish to me. The fact that they're neutral is also bullish. I would definitely buy a pullback here on the euro. So I'll be watching for that pullback. Hopefully we could get a pullback to test this point here, and I would definitely consider taking a long position. Over on the pound, not much really. On the Canadian dollar, real quick, Aussie dollar. The Swiss, I remember, was crowded, and this is what Jason teaches. Like, you see how crowded short they are here? At one point, if everyone's selling, who else is left to sell? Eventually the sellers dry up, and look what happens. When they close those short positions, you get a serious catapult sometimes. And that's where the risk reward goes in your favor. Um, and the last one I'm watching is the yen, and I see they're overcrowded short here, like he teaches. So now that I know they're overcrowded short, I'll be looking to go long the yen, because now remember, this is the yen futures, not the dollar yen. If you're a forex trader, if you're going long the yen futures, then you're basically shorting the dollar yen, for those who don't know. But if a break above resistance happens here, I would definitely consider going long the yen or buying a call option on yen, because look how short they are. And don't just if you look at the history too, look how long they were. See when they closed those long positions, right? Here they were a little bit short, and look at the move in the yen. Here now they're overcrowded short. So I believe that the yen, if we get a close of these positions, it could catapult probably right back up here. We'll just have to wait and see. And then the US dollar, they're a little bit long the dollar, but not much, so nothing really going on there. And I think the dollar's topping, by the way, because look, if the euro's bottoming and you have a top formation on the dollar, even if it does rally back here, it's probably going to sell off most likely. Last but not least, we have the grains. Not much going on this week. Corn, wheat, soybeans, for those who watch the grains. I like the grains because I think they're good for short-term moves to make short-term profits. I'll go over that in another video in the future. And last, we have the bonds. Looking at the bond market, I did see a bottom here also in the 10-year note. And this is interesting because seasonally bonds usually bottom in the summer. Something to do with the government spending and stuff like that. But with the new chairman coming, you know, if let's say he's talking about interest rate cuts and stuff like that, and he is dovish, the Fed chairman, then definitely I think the bond market could rally, most likely, if he comes out dovish when he gets in the office in May or whatever. And definitely, you know, they're short the bond market now, so it'll be interesting to see what happens because depending on, you know, his stance, we could see these short positions unwind in the bond market. So finally, for me, summary this week, again, back to the S&P 500 real quick. Me personally, not trading recommendations. This is just what I will personally be watching, but for anyone who is curious on what I'm personally watching, I'll be watching for pullbacks in the S&P 500, maybe down to this level here, 7,000 or 7,100. Buy the dips for that. And then me personally, I will also be watching for a pullback in the euro if we can get one. Then I might buy the euro as well, somewhere down here. And I don't believe in chasing the market. I don't think you need to chase the market. Let it come to you. Because when you buy at the high and then the market reverses, you basically just, I mean, unless you're holding long term, you kind of like are not buying at the best price. So why buy at the high when you can buy on a retracement? That's just my 2 cents on it. So that's about it for this video. If you did like the video, feel free to like, subscribe, put your comments below. Look forward to seeing everyone in the next one. And as always, my friends, never risk more than 1 to 2% on your account on any given trade, whether you're trading private funds or trading a prop firms funds as well. That is how you will survive in the long run. Good luck this week, guys.